Good morning, everyone, and welcome June 5th, Wednesday morning. And what I want to talk about today is something that I've received a lot of questions on. It's definitely something that I pay attention to, and it's probably the most important aspect of investing, and that's risk management. So a lot of people right now are feeling like there's a lot of risk inherent in the markets. Okay, and they feel that way because if you watch a lot of the news going on right now, it doesn't seem to be incredibly positive. It feels like the market has just gone straight up. Although I want to remind you that that is not exactly the case. The Nasdaq fell nearly 35%. Not even 18 months ago, I guess would have been about the bottom, October of 2022. So I wouldn't say we've gone exactly straight up, by the way. But it does seem that there are some industries that have gone a little bit parabolic, or price has gone a little too far. Although we've looked into that here on this show, in regard to PE ratio and then price. And you could argue the price has gone a little too high. Is it in bubble territory? I believe that for you to decide. But from what we saw and the comparatives we made to previous bubbles, you'd have to say no. So with all of that said, one of the things that everyone is always doing, in my opinion, which is very intelligent, is looking for the least risky area to invest their money. And so, what people are doing is they're saying, well, I'm a value investor. I want to invest in value. So, let's talk about what that means and if that's a good strategy. So, what is value investing first? So, value investing is simply finding investments, whether it's companies, whether it's bonds, whether it's commodities, wherever you're looking, you're finding an investment that has an intrinsic value. So something within that investment that makes it very worthwhile, but it's underpriced by the market. So now, exclusively stocks. And I don't know why you would, in this day and age, I don't know why you would only look at exclusively stocks for value. But if you were to look for value within stocks, I think it would be very difficult, simply because the market has been going up for quite a while now. And value investing when it comes to stocks tends to come in the form of when prices have fallen, they've dropped. So everybody knows the old saying, I buy when there's blood in the streets. What is meant by that is that when everyone else is scared, when prices have fallen so far that everyone else is afraid, I'm looking for opportunities. And that is truly what value investing is. Value investing is waiting for a time when prices are down as a whole, and you are finding the companies that you believe have such value within them that when the market turns around, you are going to get pushed up first, right? Because you have value, you have intrinsic value. Does anyone think the stock market's in a position like that right now? I would say probably no. I don't see that. Now, who cares about me, right? Because I'm not some famous value investor. My name isn't known worldwide, but do you know whose is? Charlie Munger and Warren Buffett. So what are they doing right now? Well, Warren Buffett is actually very famous at the moment for having he's holding the most cash that he's ever held in history. So is Warren Buffett buying right now? One of the most famous value investors in history. Is he buying right now? No, he's not. Why not? Because, as I said, proper value investing, if you're strictly looking at companies within the stock market, is to find a company with intrinsic value while there's blood in the streets. And that isn't right now. But what are other ways that you can value invest? Well, you have to follow the ideology of value. So you want to find markets that are down. You want to find markets that are down, and then you want to find assets that have an intrinsic value that you feel hold value far beyond where they're priced. Okay, that doesn't always have to be companies. So what I did was I thought, as I'm going through this yesterday, where are there areas that there does appear to be value? What areas have been beaten up the most, where there does appear to be value, and they could be beaten down? Well, for me, it was really simple. Everyone, we can say this in unison. Where have prices fallen the most recently? What area have they been hit the hardest? You got it. Bonds. Bonds have been hit the hardest. And which bonds have been hit the hardest of all bonds? Corporate bonds, junk bonds, aggregate bond indexes, long-term bonds, short-term bonds, government bonds. Where are they? Well, let's go ahead and take a look right now together at some different bonds and where we think there might be some value. And then while we're there, let's look for what we always look for, which is high levels of trading activity that can really be only be created by large institutional money. Because to have trading activity, large amounts of trading activity, there has to be large amounts of money in motion. So if we simply go through the process that I always utilize, which is based on emotion. So in value investing, what you're looking for is an emotion of, if the general public, of the weaker hands, the less knowledgeable hands, they're not interested. Prices are down too far. They don't want to buy them. And so who does want to buy them? The stronger hands, the more knowledgeable hands. Let's jump over and take a look at some different bonds and where we think there might be some value. All right, and here we are. So I'm giving it away, but I'm gonna move over anyway. So this is an aggregate bond index, all right, and this aggregate bond index holds many different types of bonds. But what I want you to take a look at in this index is here we are at the highs. In fact, here let's kind of squeeze this just a little bit. All right. So here we are. We're on a monthly chart. We have a U.S. aggregate bond ETF. So this is U.S. bonds, all right. And here we are, and here's our price. You're sitting at high price up here at 118. Let's just call it 120 for argument's sake. And down here at the bottom, the lows that were hit are at about 92. And what we saw is, this takes you all the way back to 2004. You're running up through today. It looks like there was a ton of activity. If you zoom backwards like this, so it'll change the view of what you're looking at. As we're approaching those highs into the 120s, what you see is some very high levels of trading activity. Now, those high levels of trading activity can only be created by, as we always discuss, one group of people, right? Or it's not a singular group, right? There's many of them, and that is 2020, by the way, everybody. As we scroll forward, what we notice is this is a high level of trading activity, okay, compared to what you see behind you. And then it dips down, and here we go again. And now all of a sudden, look, we're falling in price, and look what's going on with volume here. This volume level, what would you so we would say volume. So what it looks like is at these low prices in an aggregate bond index, there's a ton of trading activity. This is a lot of trading activity, everybody. Here, let's just call this there's a couple outliers there, but let's just call that kind of the high watermark of that trading activity. Look at that compared to even back here. Okay. This is your high prices. Now, at your high prices, you still have a significant amount of higher trading activity right now, right? That's at your high prices. And then let's look at the prices where you were building up. I would say that was right around here, and I would say there. Okay. So you can see the way we have stepped up from lower prices, which is in 106, 105. This is 112, up into 120, where you can see trading activity increase by, I would say, 50%, 35%, until now at this bottom where we are at 35 and 50%, even higher yet. So we can see maybe that there's some value in bonds, right? We can see trading activity picking up, significant trading activity picking up, which is traditionally the stronger hands in a market. And this is just a aggregate bond index. So let's go ahead now and take a look at some corporate bonds. corporate bonds climb even higher. So let's go ahead and just look at this. Okay. Let's just say this is where you start building right here. And this is where you are now. Look at that. This is significant levels of trading activity on the incline as prices, look at this, as prices have plummeted. What does this mean, everybody? This is something very easy to buy. All right, you can add a lot of leverage to this if you're using options. I'm not giving you advice to use options on this. What I'm telling you is we see a lot of trading activity, and we just saw an aggregate bond index, which is probably your most conservative. We're now looking at a corporate bond index, and you have volume through the roof on a price decline of 36%. I think that speaks for itself, folks. All right, let's go ahead and let's take a look at junk bonds. Now, junk bonds are the closest bond related to stocks, right? This is the closest bond related to stocks. And guess what? It doesn't look nearly as impressive, does it? It doesn't look nearly as impressive. Why? Because junk bonds are as closely related to a stock as a bond can possibly be. Your corporate bonds looked a lot better than your aggregate bond index. As far as volume goes, there's clearly a lot more trading activity going on in the corporate bond world than there is in just the US aggregate bond index world. There's a lot more activity and prices have fallen further. So from what we can see, that looks like the place to be. And if you introduce some options there, there's real money to be made. Now, if you don't know how to utilize options, I'm not advocating for the use of options. I'm simply saying a lot of people say to me, well, I like to buy stocks or I like to buy, commodities or whatever it is because there's more action. There's more price appreciation. That does not necessarily have to be true. What you want to look for is the asset that has the most upside. That's what you want to look for. Now we can zoom in and look at time frames and figure out how quickly the price should appreciate. But let's look at one more index, and that is government bonds. Let's look at 20-year treasuries. Whoa. 20-year treasuries have gone from 170, a high watermark of close to 180, and they're down at 92. And look at that activity. Look at that. So this is your high prices. That's now. Look at that. On prices that have been cut in half, they've fallen by 50%. Look at that. Folks, I believe we just found the area that has the most value and most potential, where strong hands, more knowledgeable hands are clearly involved in purchasing. Let's zoom in on this a little bit just to have a little bit of a better look at it. This is your monthly chart, okay? Let's zoom into a weekly chart. Let's see what it says. Look at that. Look at that cluster of trading activity that began in, I don't know, you could even argue it's begun back here. It's 2023, whatever you want to say, halfway through 2023. But I would say volume is twice as high now. Look, I would say this is your average volume on this chart, probably somewhere around here. Look at that. This is now. This is your 20-year Treasury ETF, everyone. Wow. That's unbelievable. Oh, I think I did. Yes, I did. So we're gonna have to put that back. But I inadvertently just removed volume, which I'll go put back on. But for now, I think we can stop sharing here. But take a look at that price. You just saw the volume. Let's go back over. So for all of you that wonder, well, okay, how easy is it to find the places that are of the most interest? And I assure you that we just did. I apologize for the light coming in and out of the whoa. But I work by sunlight and it is morning. So listen, everybody. I teach people how to do this. I teach people how to find these things. And then we find the entries and exits precisely. We talk about um, how to actually use options, futures, these instruments so that we are always paying attention to risk management, cash management, and investment management. And what we just went through right now was two pieces. We were looking at investment management and we were looking at risk management. Okay. Cash management would mean, do we have the money available to buy that particular position? And if you are following me and with me, yes, we do. But what we did just uncover was that the 20-year treasury holds the most value and intrinsic value, right? What's the intrinsic value of the US Treasury 20-year bond? Well, the fact that it's the US Treasury bond. The US is the world reserve currency. The US is the global economic structure. Our intrinsic value itself. And we just found value in the investment of the US bond as well. I hope you enjoyed that. If you found that interesting, please comment. Look, my VIP mentorship EQ Mastery course will be starting in a week or so. And I encourage all of you, if you want to learn how to find things like I just showed you on a regular basis, and then get far more specific as to entry and exit, reach out to me or I'll reach out to you. And I can show you how to find these things and when to invest in these investments. I hope that you found value in what we talked about today. I hope that you found value, no pun intended, in what we talked about today. I really did enjoy it. If you are an options trader, if you are interested in options, I would encourage everyone, and I show people this not because I don't have any direct relationship with Tradier. It's not that I don't hope to have a relationship with them, or I may or may not have a relationship with them. But right now, I found that they are having a heck of a special on their options. Your first month in, up to 1,000 options traded, costs you $10. So if you are an options trader, if it were me, I would give them a shot. It is $10 to go in there and up to 1,000 contracts in your first month. Check them out. Otherwise, and I mentioned that merely for you all. I found that special and I wanted to show it to you. I happen to work through TradingView, as you saw. Shout out to TradingView as always. It's an amazing charting platform. There are other platforms that are amazing as well. Again, I don't have any direct relationship with TradingView, not that I wouldn't like to or that I won't in the future, but for now I don't. And but I do use their software. I do think it's amazing. One final pitch here on myself, my VIP mentorship, EQ Mastery. Why is it EQ Mastery? Why is it investor emotional intelligence? Because you have to be emotionally intelligent and emotionally aware of yourself to be able to buy assets that are depreciated in price to a degree that everyone else is staying away from them or afraid of them. And you are looking at them just the way we did the 20-year treasury today, saying, this is something that I buy. This is something I buy now. This makes sense. All right, all. As always, listen, if you're having a tough day, smile until it becomes real. Fake that smile until it becomes real. Get outside. Do something that feels good. Think about something positive. Do something positive. And always remember, every day above ground is a good day. Thank you so much for joining me. And I will see you at the latest tomorrow. But I think I'm going to do a few more lives today. I'm going to try to do a few additional lives each day. In any case, thank you so much for joining me. I hope this was informative. Please ask any questions that you have, leave comments, ask about my course. Listen, if you don't have somebody pointing out to you where you can find quality investments at all times, there is always somewhere that it makes sense to invest. You need to reach out to me. You need to get involved because I am looking consistently and I find them, as you saw today. All right, I'll talk to y'all soon.